breaking news, the fast fashion growth stock Boohoo has crashed again as a major investor pulls out. Is the company doomed, or could this be another great buying opportunity? I'm Ben and welcome to Motivation to Invest. In this video, we're going to find out as I deep dive into the latest headlines surrounding the most controversial growth stock known to man, Boohoo. Let's dive in. Welcome back guys to Motivation to Invest. Before we get started, if you can give this video a big thumbs up if you like more growth stock updates like this. In addition, if you haven't subscribed already, hit that subscribe button and turn that notification bell on. That way you'll get updated when I release a new video like this. So this video is just a quick update as we run over Boohoo's latest headlines. For those of you that don't know what Boohoo is, it's a fast fashion growth stock based in the UK. Be sure to check out my previous videos. So this video here is part 5 in the series. So if you haven't seen the other videos, go back and watch them. The first video will be like why I purchased the growth stock. The second will be finding the correct buy point. And then the others in succession follow the headlines and look at both sides of the argument of whether the business is going to crash and the stock price is going to crash more, or is it going to rebound. So check out those other videos, you'll find them really informative. But for those of you that are up to date on everything, let's dive into these latest headlines. So obviously we knew Boohoo to investigate Leicester supplier over exploitation claims, the £3.50 an hour at the Leicester garment manufacturer. So that was last week. After that happened, the share price actually rebounded and was at a nice level, approximately, I believe, around £2.70 a share. And then Monday came and it crashed again massively. So what exactly did happen? Well, a few things happened. So the fourth largest shareholder for Boohoo, Standard Life Aberdeen, offloaded almost its entire holding in the group in the wake of the scandal. So does this mean that the company's completely failed and that's it? No. If anything, it's interesting because it says here, almost its entire holding. So if it really didn't have faith in the company, why didn't it just get rid of the whole holding? So it's got almost its entire holding. Another aspect to take into account is a lot of firms have been actually producing this bad news and then shorting the stock. So that's what happened with the shadow fall report, which on my previous video, they released the shadow fall report thinking it was going to bring down Boohoo stock. They shorted the stock and what do you know? There was a small dip and then it bounced back. So these businesses who publicly announce, oh, we're shorting the stock or we're selling the stock, you've got to think, what are their ulterior motives for announcing that publicly? So that's just something to take into account. There was a major short on Boohoo stock. This was on July the 6th. A Zurich-based fund called PS Squared disclosed a 0.55% short interest in the fashion firm. Now, I completely agree with that short, despite me actually being an investor in the stock, because at the time of that short, Boohoo stock, I believe, was overvalued. Definitely, it was overvalued given the current, obviously, economic conditions. And then following those allegations, that was a big catalyst for the share price to correct to more reasonable levels. So this Swiss asset manager, they made a substantial amount from this share price fall. So if you don't know what short sellers do, they basically borrow shares, sell them for a profit on the expectation that the share price will fall, then they buy the shares back and give them back to the broker. So that's how short selling works. So what else has happened in the news since we last spoke? Well, it was only last week since I posted my last video, yet so much has happened since then. Well, according to the news headlines. So we all know about the Leicester scandal, modern day slavery. The Leicester slave factory is run by Morfray, a Manchester-owned firm. Morfray has ties to the I Saw It First fashion firm set up by Jalal Kamani, the brother of Mahmood Kamani, the founder of Boohoo. Basically, there is a link between this factory where someone was allegedly paid £3.50 an hour and I Saw It First, whose brother is the brother of the founder of Boohoo. Now, it is a link, but it's not a direct link the way the news is implying. There's still two separate companies. I Saw It First is a separate company to Boohoo. Yes, the founder Jalal Kamani does have a small stake in Boohoo. I think it'd be difficult for someone to say it's direct connection. So this is the connection here. This is Daily Mail. I don't really trust them as a news outlet generally, but we'll just use this as an indication. 50% owner of Morfray is I Saw It First. Now, I Saw It First is the brother and co-founder of Boohoo. He only has a very small percent in the company at the current moment. So that's the connection. So guys, for those of you asking why Boohoo stock crashed last week and then rebounded again before crashing again this week, the answer is due to those two previous headlines. The first is the Standard & Life Aberdeen, the major investor which pulled out and sold the majority, not all, of its stake. And the second is this link between I Saw It First, Boohoo, and this Leicester garment manufacturer, where the alleged claims of low pay and modern day slavery, as the news headlines are calling it. Now, to me, these issues and the more just continuation of the same issue that was last week. So last week the major headlines broke. I actually thought that ASOS Next pulling out was going to be a major issue, but if you watch my previous video you'll see that I managed to contact some stock analysts who actually work for major hedge funds, and they informed me that these firms actually only make up around 4% of Boohoo's sales, so that was not a major issue. This issue, I believe this issue will blow over. Now, there is a lot of issues at the moment and it is worrying times for the company, but that's why the share price is low. So you've got to ask yourself one question in these moments. You've got to ask yourself, are you a contrarian investor? Do you want to observe the masses and do the opposite? Do you want to take a risk? Do you want to look at a company and say, okay, the fundamentals are still great, but these allegations and these issues may cause more issues in the future, may cause more investors to pull out? Or do you want to be on the sidelines and wait for maybe the stock to drop further? The choice is yours, but to help you along, let's dive in to the charts. Right guys, so here we are in the charts. The current share price of Boohoo is £2.18. 14 days ago, 1st of July, the price was £4 a share. So it's nearly halved in price since 2 weeks ago. So the question you've got to ask yourself is, has the company's fundamentals changed significantly in the past 2 weeks? That's the first question. Second question you've got to ask is, was it overvalued 2 weeks ago? Now, I actually believe it was overvalued 2 weeks ago. However, I also believe that its fundamentals haven't changed much these past 2 weeks. So, splitting the difference, the market has obviously been over-optimistic 2 weeks ago, and I believe at the moment it's over-pessimistic from a psychological standpoint. Now, let's look at the last major crash. We've got it around this area here. This was the last major crash. Now let's see if I can draw a line here around £1.50 a share, let's say. Now that was the major support for Boohoo. Now this major crash back in the 18th of March, 23rd of March, we all know what that was. That was the major COVID-19 stock market crash. Now, this is me again from a qualitative psychological point of view. To me, this these news headlines are not as bad as the COVID 2020 crash, sorry. They're just not on that same level. So to me personally, from a psychological standpoint, I don't think it will get back to this level. It could, but I don't think it will. Now, I did actually speak to a friend of mine who's a very, very good trader, and he thinks it will go back to this level. So there's a difference of opinions here. He's been looking at the technicals in detail, and he thinks it will drop back to this support of £1.50 a share. Now, I have that support down, but to me, I believe that's worst case. Maybe if some more bad news comes out, I believe it will reach those levels before potentially rebounding. Now, at the moment, I put another support in here around 175, where it could drop to. And I've also put another support in here around 210, which is where it dropped to last week, when there was the first announcement of the Leicester garment manufacturer issues. So these are all great prices at the moment, it must be said. From a fundamentals point of view, if you planned on holding the stock over the long term, £2.18 is a great price. Like, over the long term, it is a great price. Yes, it might drop further in the short term, so it depends what type of investor you are. If you want to wait and see if you can get an even better deal, try and time the market down, watch the technicals, watch the charts, it is possible, and you can get an extra 20-30% within 2 weeks. If you're more a long-term investor, then investing in during this stage and holding on to it for maybe a couple of years, you should see significant increases in the share price. Now, let's put it this way. If it got back to this level, £4.20, which it was last month, and you pitched here at £2.20, you doubled your money. So it's got a lot of upside potential, but there are these major issues which need sorting out. So here's the couple of supports. So this is my buy zone here. I'd say between, as it drops here, there might be between 210 all the way down to £1.50. I think that's a good sort of buy zone. I think if it breaks past this 210, then it may drop all the way down to £1.50, which would be the secondary support before potentially rebounding. Now, that's just something you guys will have to judge, you guys will have to take into account. This is not financial advice, so invest at your own risk. Don't invest any money which you can't afford to lose. And remember, you need to invest safe. So, why am I so interested in this stock? Because you've seen me on this channel, I've posted about a lot of different stocks, but I don't tend to follow it as much as this stock. So why am I so interested in it? Well, let me show you these fundamentals, just in case you guys have forgotten from the first video the fundamentals of this stock. So we're here on Stockopedia, great platform. Now here they've got the figures for the stock. Quality 92, momentum 78, not very good value at 17. However, its value is actually a lot better than it was previously. So it was around £4 a share here, now it's down to £2.17 a share. Crash, it dropped to £1.50. Now, another thing you need to take into account before I dive into these numbers, just on here real quick, is this stock has a market cap of £3.4 billion. Now, it is the largest stock on the FTSE A100. But let's compare this to a company such as, let's compare Next. Now, Next is obviously a British retailer. They sell clothing and all sorts. So Next has double the market cap size, 6.31 billion. Boohoo has half the market cap size, 3.4 billion. So, to put things simply, you could expect this stock, obviously due to the recent news as well, but you can expect smaller stocks to be more volatile. This stock is extremely volatile. Within 2 weeks, we've seen it plummet half in price, and we've also seen it double in price within a period of 3 to 4 weeks. So the stock is very volatile. That's something that you need to take into account, and you need to have the stomach for if you're investing into it. It is volatile, it is a roller coaster ride. You've got to make sure you're strapped in and you've got faith in your strategy, whatever strategy you're using. If you're going to buy and hold, if you're going to try and get in at the bottom here and then sell at the top here, whatever your strategy is, you're going to have to wait. Like, I spoke to a friend of mine who's a trader. He's going to wait for the big investors to come back in around here, he thinks, and then he's going to buy in. But to do that, you need to be obviously engaged with the market and looking at the sentiment. So let's dive into these fundamentals just to show everyone why it is an interesting stock. Current compounded annual growth rate on the revenue, 54.6%. Now, that's incredible. That's incredible growth we've seen with this stock. Current revenue, 1.2 billion. Projected to increase 1.5 billion. 2022, increase again 1.9 billion. It's also in profit, 90 billion, increasing at around 50% rate. So yeah, as you can see here, forecasted revenue to increase, net income to increase, and earnings per share to increase. Now, to put things in a clearer visual representation for you guys, in this software, when the graph is in the top right, that's good. When it's in the bottom, it's bad. So this is top right all the way through. Earnings per share is projected to increase. The analyst consensus, 5 buy, 8 strong buy, 6 hold, 2 sell. So there's a mix of opinions, mainly towards the buy. I'm not sure if this updates generally with regards to the most recent price. So that doesn't mean buy now or sell now. It means the stock's a good buy overall in general. So current ratio 1.76. So that's the amount of cash that the business has on hand to pay its short-term debts. So it's got 1.76. Generally, I look for around 2 and above. 1.76 is a little bit lower than I'd like. However, it is an online business. You would expect less overheads potentially than many other companies. It does have a lot of warehouses, a lot of factories, but many of the ones in the UK, including the one in the issue, are subcontracted. So 1.76 I don't think is too bad given the current situation. It also had great figures for the past few quarters, even during the global crisis. P ratio 27.3. Now these, I'm not sure how exact these valuations are at this very moment in time, but these numbers here are just incredible. Like, if I compare that to, let's compare that to Tesla, because Tesla, there's been a lot of talk about Tesla at the moment, and it is a great company. There's a lot of obviously hype surrounding it. Tesla has got similar revenue growth, 50% revenue growth. Tesla, obviously on a lot bigger scale, so it is safer in a sense because it's a larger company. You're looking at 27 billion on the sales rather than 2 billion, so it's 10 times larger. So to see a 10 times larger company getting that type of revenue increase is more substantial in terms of, if you're investing into it, it's a lot safer. However, profits, it's just started turning a profit these past few quarters. Now, I do like Tesla. I think it's a fantastic company. As you can see again, top right, earnings, revenue forecast to increase, net income and earnings per share. Now, companies with figures like these are great. It's easy to find great companies. What's hard is finding a great company at a great price, and that's what I try to help you guys with on this channel. So Tesla's current ratio 1.24. That's quite low actually. So Tesla's share price nearly $1,500 since. So in March, if you purchased it in March, you would have tripled your money. Now, does that mean the stock, the business is actually it's 3 times better than it was in March? I don't think so. I don't think the company's 3 times better, but that's the optimism and speculation which goes into the stock market, and you need to factor that into the price. You need to factor in how much of this is real value and how much of this is speculation. Doesn't mean the speculation's wrong, doesn't mean it's right, it's just speculation. So how much of this price is speculation, how much is real value? And it's the same with the Boohoo. How much is the price speculation? How much is the price here in this case pessimism, and how much is real value? So let's dive into what the real value of the Boohoo stock is. Well, its fair value, according to this calculation, which is discounted cash flow, is £2.79. Now that's using the past few years' revenue and net income and the projected next few years' revenue of net income, and then discounting those cash flows back, called a DCF calculation. Now, its current price, £2.30 it says here, so it's 17% undervalued. Now, it is undervalued. Now, at these prices, of course, this calculation is not taking into account the recent issues. So I would expect this to drop potentially. I can't say how much by. Maybe it'll drop to £2.30, maybe £2.20. Maybe it's at fair value now. But it's clear that it's not overvalued. And the revenues show it's a great company, as I showed previous. So you've just got to have perspective in these situations, and you've got to look at the business, look at the company, and know, okay, the news is bad, but then you've always got to have what's called second level thinking. So when you see this bad news, you've got to ask the question, how will this affect the business fundamentals? How will this affect the business's bottom line? What's the second level to this situation? For example, when I saw that Next and ASOS had suspended sales for Boohoo, initially I thought, okay, that's going to affect the fundamentals. However, I then used second level thinking, checked with one of the leading stock analysts, and he informed me it only takes up 4% of their revenue, approximately. So, in the grand scheme of things, it wouldn't affect the revenue in a major way. Now, there's obviously an ongoing investigation. Will Boohoo receive a massive fine? Will that massively affect them? It's all unknown at the moment. So, as an investor, you've just got to take the opportunities when you can and do your best in every situation. Now, the pain of losing money is a lot more than the pleasure of gaining money. So that's why it's good to be conservative with your investments, but also when you know there's an opportunity, it can be a good time to invest. I think if the stock drops back down to £1.50, like, that is a fantastic opportunity. Will it get there? Let me know in the comments below what your thoughts is on this stock. And I'll see you guys in the next video. Invest safe. In addition, if you found this video helpful, I would really appreciate if you give it a big thumbs up. And for more investing tips and exclusive stock picks, which I personally am investing into, be sure to subscribe to this channel and turn that notification bell on. And I'll see you guys in the next video. Invest safe.